Hey guys, welcome back to the channel. Today we're going to talk about what a 401k is. And I know in my last video I talked about a Roth IRA, but in this video I'm going to go over a 401k plan. It's definitely a plan that's more common for people who work in career jobs in terms of a 9 to 5, and their employer may offer this 401k plan to them. And some of you guys may just be starting their careers, whether you're just graduating from college or maybe you're switching into a new job and you're just wondering what a 401k is. Your employer is offering it to you and you're not really sure what it is. Hopefully this video will help explain what it is, how it works, how do you contribute money to it, and kind of what happens once you retire, what makes it different from other retirement plans out there like the Roth IRA. So my name is Dan, and on this channel I'm going to be talking about personal finance, how to invest, how to save more money, and also document my journey as a real estate agent. So if you guys like those video ideas, then please consider subscribing to my channel. And if you like this video, then please give it a thumbs up. It will really help out the channel and let me know that you guys like this content, and so I could keep putting out content and other videos like this. So before we get into it, I just want to note that there are actually two types of 401k accounts. One is a traditional 401k, which is the most common in terms of employers offering it to their employees, and the other is a Roth 401k. Again, like in my last video, a Roth 401k is money that you actually put in with post-tax money, and then when you withdraw it, when you retire, you can withdraw the money tax-free. But I'm not really going to go over what a Roth 401k is in this video. I'm only going to stick to what a traditional 401k is, just because most of the people watching this video will probably be offered a traditional 401k and will not have to encounter a Roth 401k. So let's get into it, guys. What is a 401k plan? A 401k is actually a tax-deferred retirement program that employees or employers offer to their employees. So what this means is that your employer can offer you this plan, this 401k plan, and you can actually put pre-tax money, which is the money before your federal or state taxes, and put some money away into this retirement account. And a lot of employers, what they do to entice you to put some money in there or to open this account is that they will also offer you a certain percentage or match a certain percentage of whatever you put in there. So for example, if you elect to put 5% of your pre-tax money into this account, your employer may say, hey, we're going to match up to 5%, up to 60%, or whatever number it is, and they'll basically give you free money to help you put into this retirement account. For example, let's say you elect 5% of your pre-tax income or money into this 401k account, and you make, let's say, $50,000 a year. You elect 5%, therefore you're going to put $2,500 every year into this account. For example, the company that I worked with, they offered up to a 5% match. So what I did was I elected 5% of my income into this 401k account. They matched another 5%. So in total, it seemed like I was getting about 10% of my total annual pre-tax income being put into this retirement account every single year. So definitely recommend anyone to take advantage of that if it is offered to you. So that's basically what makes a 401k different than other retirement plans. Just to go over it, is one, that you can elect pre-tax money into this account and your employer can actually match that up to a certain percentage. Other thing that's different about a 401k account is that is again offered to you by an employer. You cannot open a 401k account if you're not employed by a company that offers it to you, but you're able to still have an account managed by you. If you leave an employer, you can still have that account. You can't put any more money into it. There may be some instances where you can manage the money, but it's very rare. So a 401k is actually defined as a defined contribution plan. And what it is, it just differs from a traditional pension plan for back years ago or back a few decades where pensions were more popular. A defined contribution plan is basically, this is a set amount of money that you're going to pay into this account or this 401k account every month and therefore every year. And then when you retire, it really depends on how your investments grow and how, depending on what investments you choose, and also how much money you decided to put in every single year. Now, this is different from a pension plan, which is popular with a lot of companies a couple of decades ago, where companies can offer you a pension plan where they say, depending on when you retire, we're going to make sure that you earn or you will get this much money per month. Now, in order for the employer to kind of defer away from that and let the employee handle all of it and let the employee handle how much money they're going to earn or withdraw, are going to be able to withdraw when they retire. They say, instead, you're going to figure out how much money you want to put in now. We're going to match up to a certain percentage of it, and then whatever you get when you retire is what you get. So that's kind of the main difference between deferred or defined contribution and also a pension plan. So once you have the money in your 401k account, it's actually up to you to choose what type of investments you want to put your money in. So therefore, it's going to be your most common financial assets in terms of stocks, bonds, ETFs, mutual funds, and that's basically 99%. That's what people are going to put their money into. So what I did was I put my money into the account, and I basically allocated all the money into this managed fund. And what you do is basically you set what year you think you're going to retire, and think in my case I set it at 2055 or 2060. So therefore they will figure out what are the best investments for me in terms of stocks and bonds that will grow and hit the maximum amount by the year 2055. Now there are contribution limits to a 401k, so you can't really put your entire paycheck into this 401k account. Not only do I not suggest you guys doing that, because it's important to have some sort of safety net and emergency fund and not put all your money into a retirement account. Even though it is a good investment for when you retire, it is not good because you can't really withdraw the money out of a 401k account without paying a penalty, and often a pretty large penalty too. So definitely don't put all of your money into your retirement account. Definitely have an emergency fund, and definitely have some money for your daily and monthly expenses. But I do want to note that annually you can only put up to $19,500 in a 401k account, and if you're above the age of 50, you can actually contribute $26,000 into a 401k. Now the annual contribution limit will gradually go up year from year, and that's because of inflation. The government or the IRS will actually slightly increase the amount you can put or contribute to a 401k annually, and that will probably grow up in the future, but right now it is about $19,500. Now I want to move on to the third category, which is actually withdrawing the money from a 401k account when you retire. So the age where you can actually start withdrawing money from a 401k account is 59.5 years old. And like we said before, in a 401k account you actually put pre-tax money into the account, and that is knowing that you'll pay taxes when you withdraw the money when you retire. How much money you'll be paying in taxes will depend entirely on what the tax rates are at the time, and also how much money you're withdrawing every month. Now for a 401k, there are required minimum distributions, which basically means that you have to withdraw the money by a certain age, and that is to prevent you from continuing your account from growing exponentially during your years when you retire, and that's just some sort of guidelines that they set. So you can't let your account grow indefinitely. You'll have to eventually take some money out after the age, I think, of 72. That's when they kind of force you to start withdrawing money. So again, I just want to go over a few things in terms of what I did when I opened my 401k account. When I had started with my company, I know they offered a 401k account, and they would actually match 5% of my paycheck. So what I did was I elected to pay 5% of my pre-tax money into this 401k account, and then the employer also gave 5% of my annual salary into this account as well. So all in all, about 10% of my income was put into this retirement account, this 401k retirement account. And once I had the account, I had to elect what type of fund or investments I wanted to buy or purchase. So once I had that, every 2 weeks, part of my paycheck would go right into this 401k account, and then the money would be invested automatically because I chose the account or the fund that I wanted to buy. Alright guys, so that's it for this video. Hopefully it helped you in terms of knowing what a 401k is. Now, I know it could be difficult with all these options in terms of retirement accounts, and I know that a lot of you, whether you're just graduating from college or if you're switching jobs and your employer now offering you a 401k, you might not know what it is, and hopefully this video helped you out in a little bit in terms of if you should get one or not and how to maximize its benefits. So again, if you enjoyed this video, then please give it a thumbs up, and it'll really help out this channel. Hopefully I'll see you in the next video.